Hello, my dear students. Today I am going to take the next part of the chapter Source Documents of Accountancy. Earlier, we have studied about source documents, cash memo, pay-in slip, and check. Now, in this module, we will learn about invoice, debit note, credit note, and vouchers with the help of short story. So, in the part 4, we'll learn about invoice, credit note, and debit note. Now, see the next part of the story. So, in this part, we'll learn about invoice, credit note, and debit note. Now see, what does an invoice include? Invoice includes your name and address, date, price of items and services, description of items and services purchased, terms of payment or payment on due date. Now, the meaning of invoice. An invoice is a document created by the seller as evidence of a sales transaction between a buyer and the seller. It is often prepared in case of a credit sale. Nowadays, invoices are prepared with the help of ERPs, means enterprise resource planning, that is in a digital format. Yet, they can also be prepared on paper and vice versa for the purchase transactions also. So, invoice generally means bill or prepared in case of credit sale and credit purchases. This is the performa of invoice. It includes date of transaction, details of buyer, quantity sold, price per item, amount, taxes, terms of payment, and signature. In short, buyer sends debit note to the seller when he returned goods to him, as you see in the story. And when the buyer returned goods, then seller sends him credit note for the amount to be paid. So what is debit note? A debit note is a document sent by a buyer to its seller when he returned the goods. The intent is to notify the seller that they have been debited by the buyer against the goods returned. This is the performa of debit note. Now, credit note. A credit note is a document sent by a seller to its buyer, notifying that a credit has been provided to their account against the goods returned by the buyer. It reduces the amount due to be paid by the customer. If the amount due is nil, then it allows further purchases in lieu of the credit note itself. This is the performa of credit note. Now I think the term invoice, debit note and credit note are clear to you. Now, vouchers. A voucher is a document which provides the evidence of the occurrence of transaction. This is also called a source document. But there is a minor difference between the voucher and source document. Types of vouchers. Cash vouchers, non-cash vouchers. Cash vouchers are further classified into debit vouchers and credit vouchers. Non-cash vouchers are transfer vouchers. Here is the performa of cash vouchers and non-cash vouchers. Type of cash voucher: debit voucher, credit voucher. Credit voucher is prepared in case of cash receipt from any source such as sales of goods for cash, payment received from any of the debtor, income received, etc. Debit voucher is prepared for all the cash payments made by the business. Here is the format of credit voucher and debit vouchers. Non-cash vouchers means transfer vouchers or credit vouchers like purchase of goods on credit. Here purchases account debit to creditor account. So this is a non-cash voucher or transfer voucher because there is no transfer of cash in it. Compound vouchers. Compound vouchers are those which shows a transaction that contains multiple debits and one credit, or which contains multiple credits and one debit. These vouchers are prepared for compound journal entries. This is all about source documents. I think all the concepts are clear to you. Thank you. Have a nice day.